Hello, chart watchers, and welcome to this Friday, August 24th, Market Watchers Live Show with your hosts, Tom Bowley and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, the market's making another attempt at a breakout here. We got the Dow Jones Industrial Average currently up 166 points. The S&P 500 up 19 and currently above that 2873 closing high that we saw back in January, trying to make a breakout here. The Nasdaq also trying to make a breakout, needs to close above 79.32, currently at 79.46, up 68 points. Russell 2000 lagging a bit with the dollar kind of pulling back here over the past several days. So a little underperformance, but still in record territory, threatening to break out to a new closing high on the small caps. 10-year Treasury yield was up earlier, but it has reversed back down. You can see it now flat, 2.82%. Volatility continues to move lower. It is back below 12, which has been an area of support since gapping up back in the second week of August. Materials doing extremely well with that weak dollar. Energy doing the same, both of them up more than 1% today. Technology closing in on 1%. You can see also trying to break to another all-time high, trying to clear that July high. Software is the big reason why. Software having a huge day today to the upside. Also testing that July high. And a couple of the big reasons, Autodesk up $20 today from 136 up to 156. And then you've got Splunk, SPLK, love that ticker symbol, up $17 from 108 to 125. And there were a couple of other pretty good software reports out, earnings reports out, and I'll talk about some of those in a bit. But first, let me bring in my co-host, Erin. It's Friday. What do you got planned for the weekend, Erin?
GIF, I think I'm going to probably go out to Redlands to visit my father, who had a birthday this week. So I think that's what our big plan is for the weekend. Not much more than that.
Yeah, birthdays are fun to celebrate.
Yeah, how about you? Lots more wedding prep?
Yeah, still got a bunch of wedding prep to go, although most of the big stuff obviously is done. If it's not, we're in big trouble because the wedding's next Saturday.
Yes, and that is for your daughter.
Yes, yes, it's for my daughter. So very, very exciting, no doubt. It's going to be held at a winery in Charlottesville, Virginia.
Oh my gosh, that would have been my second choice for if I couldn't have gotten where I did. A winery for sure.
No doubt. And we also have a special guest on today, Greg Schnell. Greg, how are you doing today?
Hey, I'm good. Good morning, everybody.
Yeah, you're going to get out and play some golf?
I am going to try and play some golf. Weather forecast for Sunday's a little rainy, so I'm hoping to play it on Saturday and maybe later today. So.
Oh, cool. Yeah, I was able to get out yesterday. Actually, I had one of my best nines. I only played 9 holes. The course was absolutely packed, so I had to wait a while to get out. But I played 9 holes, and it was probably the best I've played in a couple of years. And I don't know why. You know, golf to me is a little bit like the stock market. You never know quite what you're going to wake up to. One day I play great, next day it just completely falls apart. Kind of like my prediction for the market, kind of looking a little toppy. I wrote the blog article this morning, and now, of course, the market's going to try and go try and make the breakout. But anyhow, we're going to have you back here in about 15 minutes or so. So if you don't mind hanging around with us, we'd love to hear your thoughts and some things about the website.
Perfect.
All right. Well, Erin, go ahead and get us started with the schedule and the agenda.
Let's do just that. We've got Tuesday. You're going to be doing the seasonality report to let us know what is going to be happening next month based on your seasonality look. Carl Swenlin, my father, will be in on Wednesday. And then while you are going to the wedding, I will have Julius de Kempener here as a guest co-host. So that'll be exciting. And then, of course, no Market Watchers Live on Labor Day. So sorry, you're just going to have to wait. But there's not much that goes on in the market on a holiday. So everything stock charts will start us off after technical headlines and news. Spotlight stocks. Greg, Tom, and I have some interesting ones we would like to share with you. 10 and 10 analog devices. ADI will be our first symbol, and then we'll finish up the show with my sentiment update. So let's go ahead and get this party started.
All right, let's do it. We've got one economic report out today. So you can see the 10-year Treasury yield, as mentioned earlier, was up earlier, got to 2.85%, but then did reverse back down. Close to a 2-month low, 2.5, almost 3-month low, really, back down at 2.82%. We'll see whether or not we can hold on to these lows. If not, obviously, you can see a couple of levels. going back into May, down around 2.77%, and then in the low 270s back in the beginning of April. So those are a couple levels to watch. As far as the economic report that was out, we had July durable goods out this morning, and it showed a decline of 1.7%. The market was expecting a decline, but only 0.8%. And then when we strip out the transports, July durable goods rose 0.2%. But again, that fell short of Wall Street estimates of a gain of 0.5%. So economic news out this morning was not quite as good as expected. And perhaps that's why the market's up, because it doesn't make any sense. Anyhow, let's take a look. I want to go through a few seasonality charts, even though I will be talking about seasonality in a lot more detail next week. I just pulled up the Dow Jones, and you can see over the last 20 years, check out September. It is one of the worst months in terms of how often it goes up. Only 42% of the time do we see September's move higher on the Dow. And the average per month is down 1.3% over the last 20 years. I'm going to go ahead and pull these up on each of the major indices just so that you can see this. And then stretch it back because the default's 5 years, but 20 years. The S&P 500 only goes up 47% of the time over the last 20 years and is averaged minus 1.2% to the downside. The Nasdaq, we'll look at the Nasdaq 100 here. And to get this up, go back 20 years, it's averaged going down 1.5%. And let's go to the small caps, which is the Russell 2000. And you will see weakness here as well over the last 20 years. Has gone up 53% of the time in September, but the average return for September over the last 20 years is a loss of almost 1%, 0.8%. So just understand that as we go into September, and this doesn't say that the major indices drop 90% of the time in September. It's about a 50-50 kind of a deal. So if we make the breakout, I would still continue to stick with the technicals and ignore history. But if we have these false breakouts like we saw yesterday in a number of areas, if we reverse back down later today and leave these long tails to the upside, knowing that August and September tend to be weak months, I think that would be worth noting. I think if you get a technical sign that maybe we're topping, and then historically it's not a very good month, that could add a little bit of credibility to that call. Let's keep moving, though. We got the Dow Jones Industrial Average. This is a monthly chart going back since the start of the bull market. And, as we continue to push higher, you can see on the most recent high back in January, the PPO, even though it was quite elevated, was pointing higher. So we got a little cup here in play. We're getting close to a breakout on a monthly basis. Still got a little ways to go on an intra-month basis. But the pullback from this level wouldn't be a horrible thing. If I shorten this just a bit, let's go with the weekly, just the last 3 years. I want to give you that long-term perspective. So you can see, between 26, 27,000, and if you want to get the actual number on the high, it was at 26,616.71. So we have about 800 more points to go on the Dow to reach that high. After setting that high in January, I was looking for some type of bullish continuation pattern. We saw on the Russell 2000 an ascending triangle. We've seen the S&P trying to make a breakout. We don't know if we're going to get it yet, but the S&P could be putting in a point C in an ascending triangle. You can see the Dow. Maybe this is a little bit of a cup that's been forming. You can kind of pick whatever pattern, I guess, looks good. But at this point, I would say all of these indices look solid from a technical perspective. So let's take a look at the S&P 500. And when I was bearish in my article this morning, it was really just short term. Just looked like we could be topping based on some of the reversals that I saw yesterday. But this would be a closing breakout on a weekly and on a daily basis if we close where we are right now on the S&P 500. We're at 2875 and change. I believe the high was 2872 and change, almost 2873. So this will be a day to watch to see whether or not we do confirm this breakout. The Russell 2000's already been breaking out to an all-time high, having a great week. This week, as you can see, we've been in this uptrend for quite some time. It's been a really nice move off of that early 2016 low where we were down below 950. We're not too far from doubling on the Russell 2000 in less than 3 years. That would take a move up to about 1900. So we'd still need about another 160 points or so, which would be what, 9% maybe. Could happen the way the market's been going. All right, so everything so far looks pretty good. If we go in and start pulling up the daily charts, on the Dow, you can see on this latest high, we do have a slightly lower PPO, but it is turning higher. And we did get a 50-period test in here after the most recent high in the second week of August. So I'm not so sure. It looks to me like it's starting to turn up again. I think the divergences here on the Dow are okay. The S&P 500 making a breakout here again. PPO starting to turn up, but currently there is a slight negative divergence. If we fail to hold this breakout, you could argue maybe that it is a little toppy here based on the daily chart, the way it looks. Let's take a look at the Nasdaq 100. And the Nasdaq 100 in an ascending triangle pattern with move over 7,500 required to test the double top that we've already seen. But off of an uptrend, it looks like perhaps this could be an ascending triangle, equal highs, and then rising lows. Looks pretty bullish. And, of course, the Russell 2000 just went through that pattern where we had the equal highs coming across, the higher lows, and we did make the breakout, which measures, by the way, up to about 1785, 1790. Don't know that we'll go straight there, but I wouldn't be surprised by the end of the year if we don't see that area tested. Okay, now one more thing. I want to take a look at these indices, but this time I want to look at an hourly chart because this is where things start getting a little bit dicey on a couple of the indices. So, whoop, that's not what I wanted to do. Let's take a look first at the Dow on the 60-minute chart. And here we had a negative divergence just a few days ago. Higher prices, PPO starting to roll over. We went down, I think, kind of reset that PPO at the center line, starting to turn back up. I think the Dow actually looks pretty good here. We move on to the S&P 500 60-minute chart. And here you can see the breakout above the prior high. But we do have a negative divergence. And when we've had this set up in the past, you can see the market has struggled. Here we were moving up. We started to roll over, continued falling. Here we were moving up, started to roll over while prices were going sideways. Now the price action then moved down. And so this could be similar, although we are getting a pretty solid day so far today on the breakout. I would just be concerned if we fail, again, to hold on this breakout. If we look at the Nasdaq 100, you will see currently I think action's pretty good. We're holding, for the most part, the rising 20-hour EMA. We're making a push. PPO looks good. Seems like it's going to be a move up to at least test that 7,500 level. We're only 15 points away. That shouldn't take a whole lot of bullish action, maybe seeing that later today. The Russell 2000, though, does have a clear negative divergence on a 60-minute chart. Higher prices, lower PPO. Just keep in mind that these can be eliminated over time. In other words, if we continue rising, we could see the PPO rise with it and clear that prior high on the PPO. And then, of course, you have no negative divergence. What I would be most concerned about is if we fail to hold this breakout, and especially if we don't hold 1715, because that would be the recent price low. You'd also be below the 20-hour EMA. That, I think, could lead maybe to at least another pullback to, say, 1700. But again, keep in mind, this is a 60-minute chart, so we're looking at very, very short-term conditions with the Russell. All right, a couple of stocks that were in the news. I talked about briefly at the beginning, Autodesk. Huge, huge breakout here. Great earnings report, topped revenues, topped earnings estimates. They raised the low end of their fiscal year 19 EPS and revenues. And, of course, they're in the software space, which has just been on fire. Splunk. The only thing I wouldn't, you don't want them to change their name to Splat, but Splunk has been a great performer for quite a while. I think if we go back and look at the longer term, let's pull up the last 3 years on the weekly chart, you can see it's been a really strong performer, making another breakout. And if we pull up that relative chart, you'll see that Splunk on this breakout now, of course, software's been breaking out. Splunk's making a really big move on a relative basis to its peers and to the S&P 500. And each quarter, I would say there's maybe a handful of stocks that really just knock it out of the park. And one of those stocks, in my opinion, is Veeva Systems. Another software stock. The stock opened today at 91. It's now at 99 and change. volume very heavy, and it has been almost a straight up move since the open. And when you look at this, software moving higher, Viva breaking out to new relative highs against its peers, also the S&P, and of course software continues to perform well. But Viva posted better than expected revenues, better than expected earnings per share, 39 cents versus 34, and then raised their revenue and EPS guidance for next quarter and for next year. I mean, it really was a blowout report from Viva Systems. So I know we got a couple of upgrades, downgrades. So Erin, what do you think of those charts?
Yeah, they're pretty interesting, actually. So the first one is an upgrade for Netflix. It was moved by SunTrust from a hold to a buy, and I can see why. Really nice. I've got a PMO buy signal here on Netflix. We see the breakout from that declining tops trend line. The gap, I would say, the resistance on the gap, I would look for a closure of this previous gap, and that would bring us up to about 390 on Netflix. So like that upgrade, of course, it is already up over 4% today, but I think there's still room to run on Netflix. So I think that was that makes sense. That upgrade did. Acacia Communications, ACIA. If you recall, yesterday it was an upgrade. Today it's a downgrade. And I have to say I agree with this downgrade, mainly because I do see that the momentum on the PMO starting to turn down. You know, we had a fake out earlier, about a week ago, or I guess earlier this week. We didn't get that decline past to get that PMO sell signal yet, but we are starting to head back down. You can see we're coming into the bottom of this trading range. I would look for this gap also to close. Excuse me. I would look for this gap to also close. I could see this moving down toward that $34 area. So I'm not liking this one either. So I am in agreement with this particular downgrade. Cummins Incorporated. This one was also downgraded, and I have to agree. It was downgraded from neutral to underweight by JP Morgan. I see a double top forming here. I've got a PMO that is starting to turn around. Could be setting up for a sell signal. You can see that volume has been coming in fairly strongly on this decline, but we are just now hitting a rising bottoms trend line. So there is that possibility that we could see a bounce off of this rising trend, but I don't like the momentum set up here, and you can see that the scooter has really fallen as well. Already it was fairly low. Philip Morris was also downgraded today from a buy to a hold by Jefferies. It's also getting ready to come and test this rising bottoms trend line, but I'm on a sell signal. I suppose you could make a case for a double top that is formed up here and that today executed, which would give us a downside projection to at least where we saw this low back here in June. I'm not liking Philip Morris right now. I would look for it to continue lower and break down below that rising bottoms trend line. So those were the upgrades and downgrades I had for today. I would like to reintroduce Greg Schnell, who's here to talk to us about everything stock charts. What are you going to have for us today, Greg?
Good morning. I am going to cover off some of the, sorry, I got my volume a little. I'm going to cover off a couple of tools on the free charts page, not that page actually, that was supposed to be closed, it's supposed to be mine. There we go. Okay, so on the free tools page, one of the things that I find about the site is there's so many hidden gems, and over here on the right hand side are a bunch of different quick links. And today, and I know Tom's discussed this a little bit before, but I'm going to talk about predefined scans. And one of the reasons I want to talk about it is because there's so much information sitting here, and there's a really, it's very helpful to just quickly go look at this. And what you're seeing is that there's the new 52 weeks highs are starting to grow, which is obviously very bullish. And then if we look back down here, the new 52 week lows is starting to decline. And so that's not just on any given day. As you can see, we've got new 52-week highs numbering up here in the 393, and if we go down and look at the new 52-week lows, we have 91. So that gives us a tilt of the market just really quickly. Now, this is all part of the free part of the site. There's so many good pieces of information in here. So what I usually like to do is I take this information, and you can either click in on any one of these as an example, and just bring up these stocks and then highlight the ticker symbol, and it'll break out the chart. And as this chart breaks out here, what I want to show is, these scooters, these stocks are running really, really strong. So it's not going to give you the breakout date. It's going to give you anything that started to run. But there's a lot more power here than just looking at it like that, because what's going to happen is it's going to sort it alphabetically for you and not really enable you to do anything. So what I normally do is I click on all of the new highs, and then I would just replace an existing chart list. And this you need a membership for, but I really think, the amount of money that you would make just being able to sort these stocks is really important. So I usually look to scan for a breakout of some sort. So anyway, I've got a whole bunch of lists. We could have put it in the scanning for dire straits or whatever. Wherever in my scanning chart list, I never want to look and see what's in there. I always write over it. So if I want to save it, I have to do that. It's trying to bring up 400 charts here. So let's just give it a second. Okay, so then what I would normally do is I would take this information, and you have a whole bunch of choices of ways to sort it, but I want to sort it on the scooter ranking, so I want the top to be here. Then I sort by industry and sector. And when I look down, all of these are ETFs that don't have sectors assigned to them, right? So we're getting down here. Now you can quickly look and see, here's apparel retailers, and when we go over and look at these, we're going to be able to pull up the charts. I don't really want to buy something that's so extended. It could continue to run, but it's just a lot harder to own. No real place to put your stop conveniently. So I'm looking more for something like this buckle chart that's just trying to break out above this previous high. And if that's going to start to break out, I've got a natural place to put my stop. In this case, it would be 27.50 after it breaks out. And I want to see that hold, or a recent low like today. So if the stock doesn't break out, I'm not interested. If it does break out, I've got a place to put my stop. But the beauty of the predefined scans is just to go in here and sort by all of these different features. And the way I did that again was I sorted on the scooter ranking, then I went over to the industry group, and then I went to the sector. So what we're trying to define here is the groups that are doing really, really well. And on Monday I had picked Lululemon for one of my stocks, and the reason I liked Lululemon was because it was breaking out above that 130 level. So you don't have to work very hard to find stuff. I think the bigger issue though is you need to be able to sort it properly, and that's what's really helpful. So as I go down through here, here's a whole bunch in special consumer services, and these are. So again, just to reiterate what the scooter ranking is, we measure the stock's price action compared to some moving averages or other indicators like rate of change, and then we give that a value, and then we compare all of those values against all of the other stocks in its group. And in this case, it would be a mid-cap group or a large-cap group or a small-cap group. So what we want to do with that information is 99.7. It's better than 99. The price action is better than 99.7% of the mid-cap stocks. So this thing is absolutely flying. And I find actually after it gets to 99, it's probably a little late to enter the party. So I'm more likely to want to try and find something around the 75 level. And if we go look at this SCI service, it's already broken out too. There's a number of stocks right now, but the market's just kind of sitting in a base and trying to break out, as Tom mentioned earlier today. And so we want to find these stocks as they're breaking out. So here's Oceaneering. And again, just, it's so easy to just hover over, but I'm not really interested in a scooter ranking of, 99.4. That one's actually not bad. Large cap stock, just starting to break out. But typically I want to find something around the 70s that is just starting to move. And again, it's based over a 200-day period, so it's not taking today's price action. It's adding today's price action into it. But just looking through this charts, I mean, there are so many. There's American Express starting to break out. You know, that one looks like it's got lots of upside ahead of it. Here's Visa, after correcting for or going sideways for a month, starting to break out. So I think the ability to put these into a chart list is critical. And then obviously, if I put them into the chart list straight away, so what I did was I just kept them in the chart list, and you can see this number that's here. Now the number is just basically alphabetical, but the way to control that number feature is to, first of all, we have to edit the list and get rid of the numbers I put there. So let's go get that off. So you can check this box, or you can go to the bottom of the page and check this select all. And then what you want to do is remove the numbers from this list. So I've taken them off. And the way you put those numbers on, one of the options says save it in the sorted order. But one of the things you need to do is go to the summary tab, and the reason for that is because we need all of these features. So for me, I would prefer to sort it on scooter ranking, then on industry, and then on sector. And now I want to save it. And so the way to do that is to scroll to the very bottom and hit this number in sorted order button. So again, I've got my scooter ranking. It's grouping by industry and then by sector. And so when I hit this number in sorted order, you'll see there's no numbers in front of this. We're going to hit the number in sorted order. Are you sure you want to do that? Yes, we do. And so as this data comes in, again, it's populating 400 charts here, so this is a relatively long list. I hit the tab button there. So now you can see these numbers are here, and they're in order of the scooter ranking. Now, I'm not sure how many people are online from India, so we'll probably miss some of those. But just if we, excuse my scrolling, if we quickly run down and just whatever, here's financial administration. So all of these are in a nice grouping together, so you can quickly just go highlight all of these. And again, strongest is first, and you can look through the list and just see if there's anything you like. Now again, all of these stocks are just from a list of breaking out, and you know, in 7 minutes I've probably shown you 20 or 30 charts that look interesting so quickly. But the one thing that I would say is, you know, a lot of people come to visit the StockCharts website and just want to use the free tools and don't really understand the reason for membership. And so one of the things I think that happens is, you know, yes, you're getting the information, but it's, you know, coming at you as a fire hose, and what you really need is the ability to sort that information. So I would strongly encourage you to take the predefined scans or predefined technical alert information and look through that and see a little bit more. I'm just going to spend a few seconds here, and then we'll flip it back over for our next segment. But the one thing I wanted to show you is all the different types of charts. And so if you look through here, new 52-week highs, this is not a today thing. This is a bigger picture. Bullish 50 and 200-day moving average crossovers, bigger picture. There's only 10 of them or so right now. So it's pretty quiet, but you can quickly see that these are longer periods. And then moving above an upper Bollinger Band, this is literally a one-day thing. It's finally kind of exceeding the upper Bollinger Band. And when you get these kind of moving above some sort of price channel, Keltner channel, Bollinger Band, these are all very, very helpful to just realize that these stocks are already at an extreme, and those are probably not the ones you want to attach to right now. It doesn't mean they can't go higher, but you know, a Bollinger Band says 2 standard deviations, and you're already moving above that. So maybe you want to wait for the stock to come in a bit, and that would be like an Alexander Elder sort of trade from the ChartCon. So hopefully I've shown you some different ways to do it. But if you look through here, you know, here's all the stocks moving below the lower Bollinger Band. So those are probably not the ones you want to keep shorting, but perhaps those are ones you want to look at to buy. I'm going to talk about in a few minutes about some of the things I covered off in the ChartCon presentation. I get a 5-minute segment here. I got a 1 hour on ChartCon. So if you haven't seen the ChartCon presentations, I'd encourage you to go. You can still go in and buy all of the videos. There's 16 or 17 of them, and see really 17 different ways to approach the market. So I would encourage you to do that. Lastly, if you're a candlestick pattern person, these are all buried down in here, and there's just so many. But here's 44 bullish engulfing patterns. That's just a great place to start. So anyway, with that, I'll turn it back over to Tom, and we can start the next segment.
Okay, appreciate it, Greg. Always, I mean, that's great information, and we do go into those predefined scans quite a bit, and I think it's always a good idea to give a refresher, because it is important. And if you're looking for trading ideas, I mean, there's so many places to go on that page alone. And again, like you said, the candlestick patterns, if that's something that really piques your interest, you've got a number of different patterns. They could be single candle patterns or longer term patterns, but it's broken down. So if you're more of a Nasdaq fan, you could actually go down the Nasdaq column and zero in on those. If you're looking at the New York Stock Exchange, or if you really are, want to look at, say, the over-the-counter. I mean, it's all broken out for you, and there's so many different ways to approach trading. But this is at least one page that can give you a lot of great ideas. So, very good presentation. Okay, well, we are going to go ahead and jump into our next segment. I don't know which of you would like to start. Greg, you want to keep on going?
Yeah, I think you should.
I could definitely do that. Okay, so one of the things that I presented at ChartCon was the concept of buying something that was deeply sold off. And that's harder to do. And so we don't really want to do it on a daily chart, because that can be pretty whippy. But we want big sort of macro themes that are making new lows. Maybe it's an overall market sentiment where all the tech stocks actually bottom out. In this particular case, I'm going to use the example of gold charts. And the reason I'm going to pick gold is because they've been ugly. I mean, they have literally been on a 2-month slide, and most people are, I would say, ignoring gold totally, which is a good thing if you're trying to find a strong anti-sentiment trade. So what we want to look for, so on my ChartCon presentation, one of the things I mentioned was that there's 3 different types of traders. There's breakout traders, and William O'Neill is a great example of that. There's trend traders. Michael Covell is a good example. Alexander Elder, pullback within an uptrend. And then there's the people who are looking for big reversals, and that would be a Paul Tudor Jones, a Tom DeMark. George Lane was a great guy, inventor of the stochastics. And so what I want to cover off today is this sort of setup and how to look at this setup. And I'm going to use the gold and silver stocks because they're actually making a big move today. But more importantly, I think the setup, and maybe if I just go get the gold chart for the day, let's just go grab GLD. What we want to look at here. So this has been a bit of a slide, I think we would all agree. And so what we see is the full stochastics has been beaten down just sideways, and it's starting to move today. So this week we're actually going to make a higher high over last week's high. And so usually on a big downtrend, that's kind of one of the nice signals that you like. So as an example, in this downtrend, this bar did not make it above the prior week, but this bar did. And that was a nice place to pick a low. So we don't necessarily know that's going to be a low, but it's a good place to look. And obviously we had exceptional volume on last week's low, so that helps us pick it out that it might be an issue. And we've got a big 4-month slide, which is kind of the minimum that I would like to see in the underlying. So that's the precious metals part of it. And we started to get the full stochastic turning up below 20, which is something we'd look for. Now what I want to talk about is some of the charts that are setting up with that same setup, and I've just picked a few names because I've only got a few minutes, but I'm just going to go show you some of these setups. And again, in order to hear the whole presentation, I would encourage you to go to the ChartCon presentation. That was kind of the day one kickoff. So go and look at that. But what we want to look for is a full stochastic that's come down to this 20 level. In this case, this one's actually making a higher low here. The stock is at really good support levels, and I've just explained why we think we might get a move back up in the precious metals. But it's interesting, considering how ugly that gold chart was, this has pulled back a little bit. It's about 10%, maybe 15%. And then here what we see is we've got a level where the PPO is just kind of created some tops here, but looks like we're actually going to turn up above zero here if it was to bounce, and that would be a very nice place to catch an entry. So that's one example. If we went straight to a gold example, I just pre-marked up these charts. And just so everybody knows, the way I sort my charts is by ticker symbol and then the date. So 2018, June 29. This is August the 24th. And if you do it in this order style, then if I had a whole bunch of them in a row, like here's USO, it will literally file them by the month or the day that I looked at them. So I think that can be helpful if you're looking for a way to sort charts. Okay, so here's Royal Gold, and what we see on this one is we're getting our full stochastic signal on the weekly chart today. We're sitting right down here near support, not a bad place to look for an entry, and we have this big long PPO trend line, and it looks like it's trying to bounce right at zero. So for me, this stock was $98 here at early July. It's $75 now, and you know, if you can make that $20 on this trade, I think you'll appreciate that that's a pretty strong move. So looking across at the different trades, and I'm just going to pull up two more charts here, and then I want to show you an example of one that actually worked using this system because it just kicked off this week. And this is Agnico Eagle. And what we have here is the full stochastic is about to turn. The stock is sitting right down here near a former support level. The PPO is the only thing I don't really like. There's no real bounce near zero. So I haven't, if I was to take this trade, I still like it because it's pretty much where the PPO has bottomed before. But I really want this low to hold. And the nice part about using a full stochastic trade is the stop goes very close to where your current price action is. And you have to give it enough room. And I don't want to get into how I set the stop. I described it fully in the ChartCon presentation, but it's based on the low in this period here. So it could be this week or last week or today. All depends. But you want to use that low as your main low, and then your trade goes against that. So anyway, I think those are particularly good setups. If you hate buying breakouts because you think the market is topping and you're worried about that, these are really nice setups to try and look for. And I think you'll agree if you look across the chart, there's some great places. This trade didn't work out here. I would say George Lane does a great job of covering off how that works, and I described that also on the ChartCon presentation. Lastly is AG. This is just a silver stock. And what you see here is this is beaten down, sitting right near a previous low. But look at this PPO. It's sitting right near zero. This would be, so it moved above zero for the first time in 18 months, pulls back a little and starts to take off. That is the kind of ride you really want to get on. So I think it's an exceptional setup. Now, I'm just going to go use a stock that recently broke out last week, and so the full stochastic had pulled way back here, and one of the critical things that I like on these charts is when the PPO is also ready to break out. So in this case, there's a downtrend here, a downtrend here, and a downtrend here. And if we go back and look at the full stochastic, this was a nice low. The one here was a little bit early, but stock started to run. Now these are big moves. This is, you know, $2 to $14 in a couple of months. This one was, call it 7 to 35, and this one's already up 25% this week, 35% this week. It's having a bit of a move, and you can see that there's a bit of a volume shock showing up. So these full stochastic pullbacks, this one was a little bit higher, but the chart I was actually using for this was the ETF instead. And maybe I'll just bring that up, but it's a Canadian ticker symbol. And what we get is this pullback here, and you can see that there's a nice linear line going across here, and it's just starting to turn up. So literally all of the marijuana-related stocks have been absolutely flying this week, and many portfolios are up 50 to 100% if they got in on Monday as the signal started to show up last week. So with that, I'll turn it over and let Tom and Erin.
All right. I was going to add on to your gold.
Yeah,
question.
if you could.
Yeah. So one of the things I cover off, since you're here, I'll use that phrase, is I look at the premium and discount on the Sprott Physical Gold Trust. And I've noticed that we're getting a lot of bearish activity here. So I think that that does support what you're talking about as far as a breakout for gold. And of course, my PMO is set up. It's starting to sort of decelerate, though, off of that drop we had. But if you look at what's actually going on with GLD, you can see we're getting a nice breakout here. So that would, of course, mean that we probably will see that breakout up here on gold itself. I'm still a little bit, I'm not totally on board with gold, mainly just because I'm thinking the dollar is going to bounce here off of this area of support. You know, but I can't argue that really fiercely because I do have a PMO sell signal. I mean, the chart doesn't, the technicals don't really support what I'm saying, so I'm not going to get out there and be like, yes, dollar is going to rise, because the technicals don't look so good. It's more of a feel, and so that's really not what we do here. But
okay. Well, thank you for pointing that out. I agree. I think, and one of the things I like the gold trade for is the sentiment, like Erin pointed out, and the commitment of traders report, which I just see on the Twitter feed every now and then. There's lots of people talking about how it's kind of one of the best setups they've seen in 10 or 15 years.
Right. All right. So I wanted to spotlight two stocks. First, I did write about Uso and Oil yesterday. Recommend you go check that article out. My sense was that things were lining up for oil. This is the chart from yesterday, and I will click on it and give you the real-time chart. But what I was looking at, and let's see if I can make this a little bit bigger here. What I was looking at was the fact we had these descending wedges. We got the breakout on Wednesday. We held on to that breakout, and when I did the measurement for this particular chart pattern, that put up my minimum upside target right around 1565. So the PMO is lined up beautifully. You can see the OBV popped out above that declining trend. Scooters back up in that hot zone. And then there you go with WTIC. Same idea. We got the breakout and it held yesterday. So if we look at the live version of this chart, I love it when things happen like this right after I write about them. So we got a nice gap up on USO. I think it's ready to continue its run. It's up 1.5% today, but look at, we got the PMO buy signal. This is going to, the OBV numbers will come in later, but it's going to continue to rise. We're going to end up with a positive close. It's just a matter of how much volume will be added to the OBV later today. But I still like USO. I'm wishing I'd put my money where my mouth was yesterday, but that's all right. Hopefully it'll continue. But in that vein, if you're interested in some in a stock that's in that area, I like Chesapeake Energy right now. I think this would be a good way to get in without sacrificing a 1.5% breakout today with USO. It's got a very similar setup. I have a PMO buy signal set up here. I just got both a short-term and intermediate-term trend model buy signal. You can make a case here for a double bottom off of this decline. Do the measurement here, and we're looking at a really nice move, likely up to test those highs we saw back in July. So I think this might be the place if you want to, follow on with a play on oil or USO. It's just a pretty good setup here. So those were the ones I wanted to spotlight. Tom, what were your spotlight stocks for the day?
Okay, well, I am looking first at AMD. I've spoken recently, been asked about Intel and AMD, and just talking about how AMD has just been performing so much better. And it continues. So you can see it up another 5.7% today. It has been a huge mover over the last 6 days since testing that 20-day moving average. It's gone from under $19 to over $24, and you can see the volume the past couple of days really spiking. And all the stocks that I come up with here actually are coming off of my high volume scan that I ran, where I looked earlier today, and I think it was around 11 o'clock Eastern, and all the stocks on the list that I took a look at had already traded at least 3/4 of their average daily volume over the last 90 days in the first hour and a half of today's trading. So these were stocks that were already showing a lot of volume, and so I wanted to show, some of them have news, some of them don't. Some of them are just making technical moves, and you got a lot of technical buyers jumping in. But AMD, when you look at the semiconductor group, which has been going sideways, AMD has been absolutely flying, and as a result, you have one of the best performers, if not the best, in the semiconductor space, rallying, and also the stock has clearly been outperforming the S&P 500 by a mile, even though the group itself has not. So semis are trying to make a breakout today above the 20-day moving average, and if they do so, AMD has clearly been one of the leaders. Let's keep moving, though. We got GERN. This is in the biotech space. Extremely heavy volume today on GERN. You can see the volume spike, huge move up, taking out these prior highs. I looked, I didn't see any news today, so I'm just thinking that it's been moving higher, and maybe it's on a lot of radar screens, or maybe we'll find the news later. But anyhow, GERN up 27% today on extremely heavy volume. And it's hard to chase a stock like that, and also AMD, because they have been moving straight up. But here's one that's been consolidating for a while. MWL, which is New York and Company. It's an apparel retailer, and it's awaiting a breakout. And you can see how strong the overall group has been. And the stock has been stair-stepping up against its peers. So as strong as the group's been, this has actually been a better performer. And you can check out the heavy volume that's accompanied some of these pushes to the upside. Volume continues to pick up. So this is one that appears to be under some accumulation. It's only a $5.42 stock right now. Breakout above 550 would be very bullish. Next up, ANAT, which is a networking stock. This is this is Arista. Sorry, Arista Networks. You can see the 310 level. That was the high back in February. A lot of sideways consolidation, not only in this stock, but also in the telecommunications area. But we have broken out in telecommunications, and it looks like Arista is following suit today. Check out that volume. And again, that's going to be the common denominator on all these charts, is that we do have the heavy volume coming in to support these moves. All right, MEDP. This is MedPace. This is in the biotech space. Had a huge move back in late July. You can see the move from $47 up to about $63 and change. But it's pulled back, and we set a reaction low. And what I refer to as a reaction low is that after you make a move to the upside, it's just coming back down. Whatever that low gets set, that's a pretty key area of support. So we bounced off of it, and check out the volume where we bounced from 54.5 or so to the upside. We did it on very strong volume in 3 days, went from 54 and change up to 60, more than a 10% move. Very strong volume, and now here we are back down at this level again. It's risky. It's a biotech stock, so you want to be careful. But at the same time, I do think it presents pretty nice reward to risk. If it goes back to that late July high from the current price, you're talking about probably about a 12, 13% gain, and you wouldn't have to risk a whole lot. The biggest fear I would have holding a stock like this would be some kind of news coming out when the market itself is closed. BL. This is Blackline, and it is also in the software space. We talked a lot about software today, but here's another stock with solid volume. Had good volume yesterday, put a tail in just above the prior highs. Looked like maybe it was going to pull back like the overall group, but instead we have seen a huge rally, a lot of money rotating into software stocks, and you can see that the stock relative to the software group is near its high of the year, certainly gaining ground, and looks good, and a very strong performer relative to the S&P 500. And as I've mentioned many times, software has been one of the best one of the best areas in the stock market. And let's see, we've got one more here I wanted to go over, and this is Vmware, Bmw. They also reported earnings, by the way. $2.17 billion was their revenue. Market looking for $2.15 billion, and earnings per share 1.54 versus 1.49. And I'm going to go into that relative chart again. And You can see this is another software stock, theme of the day for sure. But if I annotate this, it seems to me like you've got price support and trend line support getting close. First, I'll put in the price support here. There's a couple levels that I'm kind of watching. Here, after the gap up, you can see the reaction to the downside. We've been holding this 143 to 144 area as support. And, of course, the resistance is going to be up here at about 163. So if we continue to drift lower, I think VMware could really start to show very solid reward to risk. And here is the trend line that it has been kind of following since the low in February. And that comes in just about 145. So the stock has been down with its earnings report today. You can see it down $4. But I believe if it goes a little bit closer and gets near this price support area and trend line support, that VMW could be a very viable candidate on the long side. So that's all I had for mine. So why don't we pull up the summary? Greg went over a couple of stocks, well, AEM primarily. Erin went over a couple, and then I added a few. All of these, though, that I went over, again, were high-volume stocks. So when I was spotlighting, that's really what I was focusing in on. I was trying to find stocks that are just have unusual volume today, heavy volume. Okay, well, I guess we're ready for the 10 and 10, but before we get into that, I do want to thank Greg for stopping by and being with us today and hanging out a little longer than I think he originally had planned. So, Greg, thanks for that AEM and for the Everything Stock Charts, and I'm sure we'll be back in touch soon. All right, I think maybe we already lost Greg. I think he did step out, so no biggie.
Yeah, he already dipped out, so. All right, well, let's get started on this 10 and 10. Let me get my RRG up here so everybody can see it. All right, are you seeing it?
I am seeing it.
All right, excellent. Okay, so I already had put it on the RRG, and I did find some interesting ones. The requests, though, look at this. Over half in the technology sector. So we're going to be looking at a lot of technology stocks today in the 10 and 10. But I thought that was especially interesting. That seems to be where all the interest is right now. What are you thinking about the technology sector?
I mean, technology is, if you've got software breaking out, I think that's a pretty good sign because software has been one of the leaders. I mean, I was really kind of surprised that we saw the strength. Of course, we had a number of earnings reports, and those are wild cards. I mean, it's hard to predict how they're going to come out and how the market's going to react. But clearly, the market likes a number of these software companies' earnings reports last night, this morning. And so it's hard to bet against technology. It still has one of the highest scooter ranks when you look at all the sector ETFs. So I think it looks pretty good.
All right. Well, let's go ahead and get started. Let's see. What was our first one? ADI. All
right. ADI.
Yes. KC, I believe. What is it? Analog devices. Okay, there we go. Yeah.
All right. ADI. All right, so here we go. First of all, I like the huge reversal on the heavy volume that came in on Wednesday. Looked like we were gapping down. I think that was earnings related, where it gapped down and then completely engulfed. Really, not just the last day, the candle on the prior day, but over the past almost 2 weeks, completely engulfed all of that action, and we are continuing to see it rise. But I do want to see it clear. It's been downtrending, so downtrend is just a series of lower highs and lower lows, and that's what we were forming. In order to reverse this pattern, though, I think we really need to try and take out that 99 level right about there. So if we can get back through 99, I like ADI. And as I mentioned earlier, we do have pretty good action in technology stocks and some semis. So, breakout here, I think, would be confirmed by some of the action we're seeing in the overall market.
Okay, let's see. Our next one, the most popular in the chat room, is CRM. And this one apparently was recommended by Kramer and Mark Chaikin. So are you going to recommend it?
Well, again, you've got a stock that's in the software space. It's breaking out. I mean, this is definitely the theme for today. And on a relative basis, yeah, I mean, it's been a great performer relative to software. And obviously, then it's a great performer relative to the S&P 500. So I don't really see any issues here. The one thing I would say is if I annotate, you know, I don't like to get a stock while it's in a, you know, in the midst of a breakout where it's already gone up past resistance quite a bit. It's up almost 3% today. So I would be looking maybe for a pullback to come back down and test this area of support, which is down maybe closer to 149 or so. So if we get a couple dollars off on it, then I think it starts to become a lot more interesting.
Okay. Our third symbol, staying in the software vein, Microsoft. They were in the news today with something. I can't something about. Oh gosh, I can't remember now. But they were in the news today, and it wasn't positive, if I recall.
Well, the volume isn't that great, so whatever the news was, the market's shrugging it off. I didn't see anything, but here you can see that the recent low, again, what I call the reaction low, kind of coincides with this gap support area. I think Microsoft's fine. I think it's been a great performer for quite a while. It's been helping to lead the software index higher. You can see August on a relative basis has been a little rough for it because we have been consolidating, but it follows this period of exceptional outperformance relative to the software stocks. So I think these stocks just go through stages. Just like their chart goes up and down, their relative strength can go up and down as well. But the overall trend in both remain higher. So I'm bullish Microsoft.
Okay, we have an industrial here. I can tell you I don't like it looking at the PMO. BLDR, Builders First Source.
Okay, builders, yeah, this doesn't look very good. The group, you can see the overall industry group is pretty weak, really struggling to make a move. You know, we got the major indices either breaking out or getting close to a breakout. You can see this group is not. So without even looking down below, I could tell you that the relative strength of the entire industry group is weak relative to the S&P. So trying to find a winner in this kind of a group is not going to be easy. And you can see the BLDR relative to the S&P is not good, and relative to its peers, it's now broken to almost a one-year low. So this is a stock that I just don't see anything really that I would be overly excited about. From a technical perspective, I'd like to see some news coming in, something maybe an earnings report that beats, and maybe something where we get a breakaway gap. But I think just looking at this, you can see the trend line just continues moving lower. When we moved down recently, right in here, that second week of August, volume was heavy on that move to the downside. I think we've got a lot of distribution here. I'm not a fan of this one either.
All right, let's see if we can find one you're actually a fan of. How about, let's see, Ultra Clean Holdings, UCTT, semiconductor, of course.
Yeah, not going to be a fan here either. You can see just looking at the chart, price action going down while the semis are going sideways. So what does that mean? You have one of the, you know, you're scraping the bottom of the barrel in terms of relative performance. Now, some might say from a value perspective that can be appealing, and maybe it is. That's not my style. I'm a momentum trader, and this one's got nothing but downward momentum here. And again, the trend lines, I mean, just drawing a simple trend line would be one way just to you know, quickly assess the fact that this is not a stock where I would be overly interested in. You can, you know, by grabbing that line and then connecting the bottoms, you can see we're just channeling lower and lower. Not a fan. All
right. This one is having a great breakout day. I think it might be a little late to get on board, but TXMD, Therapeutics MD, it's a pharmaceutical.
All right, TXMD. Well, the pharmas have been on fire. This one you can see was under a lot of pressure, starting to come back up. Good volume. I don't know if this was earnings related or what may have happened, but I think there are a lot better places in pharmas. We are starting to turn back up relative to the group, but we're way off the relative high that we saw just a couple of months ago. And when I said, you know, it's okay to see a pullback, this to me does not qualify as a pullback. We were in, you know, really good position. And 2 months later, we're moving to multiple, you know, multi-month relative lows. So this is not a stock, even though it's having a good day, and I certainly wouldn't chase it. I think there are going to be better stocks. And first area of resistance I see, I think we're just about there. Here was the big volume or increasing volume breakdown below about $6.15, and right now we're at $6.12, and the 50-day moving average is at $6.18. So I think we got some work to do here.
All right. The next one is Specialty Retailers Tractor Supply Company, TSCO.
Yeah, I just looked at this one recently, and I'm not quite sure why. Oh, the breakout. That's why. Very nice breakout. 3 white soldiers, if you're a candlestick fan, that's always bullish. It's in the specialty retail space, which has been very strong. So you got a good stock in a very good space, and you can see the relative strength versus the S&P just broke out. And if we go up here, relative to its specialty retailers, it's moved up to the highest level we've seen probably in about 6-7 months. So I think there's a lot to like here, but it's overbought, and it's been straight up. I don't like to chase. So I think the key here on this stock, you can see the high in January, a few tops right about the same level near 81 over the last month or so. We've broken out. We're up to 88 and change. Eventually, we'll get a pullback. I would look for that rising 20-day moving in average for entry.
All right. We have one that was on a run, but it's struggling today. Foot Locker, FL.
Yeah, I think Foot Locker reported results. I want to say
that's a pretty big move.
Yeah, and actually it's hitting a big area of gap support. I know they beat on their bottom line. I think they reported, I want to say, I don't know if I'm getting the stocks wrong, but I thought it was 75 cents versus 70. And I thought they beat on their top line as well. So this could be an opportunity, but I would want to hold gap support. So right there is your gap support. We did go down and hit it right here earlier today. If I was going to give this one a shot, though, I would keep a very tight stop. I think if you close below 46, I'd be out. So you can keep a fairly tight stop. And if this overall uptrend continues, what I would be expecting ultimately is a move back up around 58. So not a good reaction today. And I hate getting in front of a freight train with this kind of volume because I don't like intraday stops, but I think you almost have to use one here on Foot Locker. So you could get whipsawed out of this stock pretty quick. But I could make an argument that it's bouncing off a gap support here.
Okay. Let's see, 2 more. Quinn Street Media Agencies, QNST.
This is a small cap media company, and media agencies really fell apart recently. As you can see down here, see that huge drop? It was breaking out. I mean, I really thought this was going to be a group that was going to perform really well for a while, and it just completely fell out of bed. Starting to regain some strength here, but this stock has been in a really nice ascending triangle that it just broke out of, and you can see the volume was confirming. So let's pull up, let me just annotate this really quickly. But not exactly equal highs, but pretty darn close. And with that, you can see the lows kind of coming in here, the higher lows. So you got a really nice uptrend followed by what appears to be an ascending triangle, and certainly yesterday's move to the upside. You got the breakout, and look at the volume pickup on that breakout. I would be looking for a measurement here, and this is going to be pretty exciting. I think you're going to see $20 on Quinn Street in time. I like it.
All right. And our final one looks extraordinarily overbought to me. I certainly wouldn't get in, and I don't even know if I'd hold it much longer. Boingo Wireless, Wi-Fi, WIFI.
Yeah, I think they just came out with a really strong earnings report as well. Huge move up here, breakout. I like the stock. I think it's in a little bit of an ascending triangle currently. But anytime I get this kind of a move, the stock was at 23. The next day it was at 33 with this kind of volume, which is just off the charts. Obviously, they came out with some earnings that just completely took Wall Street by surprise to the upside, which I like. The question now is just where to try and get in to minimize risk. And so what I'm seeing here, a couple equal highs right up here near $33. And I could bring that back down just a bit right to there. And then literally you kind of got this whole ascending triangle or pennant or flag or whatever you want to call it. That's, I think, pretty bullish. Now, could it eventually morph maybe into sideways consolidation? It certainly could. So I would like entry at the current price, but then I would probably add maybe on a 20-day test and then use $29, actually 28 support. Maybe use 29 as my second entry and 28 as a closing support level. but looking for much more upside. This was a long time of basing and sideways consolidation before this breakout. So I find these kinds of candles to be extremely bullish. And I think eventually you'll get the breakout above 33 and probably make a run, I'm going to say, for 40.
All right. That concludes the 10 and 10. And there are the symbols that we went through. Tom will be sending me those shortly, and I will get those up in the Market Watchers Live chart list, which you'll find at the top of the Market Watchers Live blog. And the link is also in every Market Watchers Live recap that I do. Okay, it is time for our final market update. Let's go see what the market's been doing. It's actually looking pretty good right now. The markets are most of the major markets are up higher. You can see the Dow and the S&P up higher, as well as the Nasdaq. All of them seem to be consolidating a little bit, maybe digesting this nice move that we saw this morning. The OEX, similar, hit intraday highs and seems to be consolidating, maybe forming some flags here. S&P 400 also higher on the day and is moved ahead of the highs that we saw just a couple days ago. Russell 2000, it pulled back, but it's back up toward those intraday highs. TSX, really great morning, but it is actually starting to fall apart a bit, taking back about half of the gains that were posted this morning. Treasury yields mostly unchanged, currently reading 2.823%. UUP gap down, but is starting to consolidate sideways. Gold, on the other hand, big gap up, and it hit intraday highs. It is pulling back slightly, but right now, GLD is up over $2. USO, big gap up, and now consolidating the move sideways. And the VIX, we're looking at moving lower. We're under a reading of 12 right now at 11.89. I'm going to take you very quickly over to our member dashboard and the market summary. And there you are. You can get to it easily. And let's see what's been going on with some of the industry groups since your update earlier. As you can see, as far as industry groups, gold, of course, leading the way. Networks and oil also on the high side, as well as semis. As we were talking earlier, tech is having a good day. But gold certainly is the big winner right now. And we can see as far as our international ETFs, all of them are higher, except for Singapore. Singapore is being left out, currently down, looks like 8 cents, and reading at 23.97. Quick peek at that chart, and you can see we've been in mostly a consolidation zone, but the PMO is still looking fairly healthy. I don't expect it to continue much lower. And that concludes our final market update. Did you have something you might want to add there on the end, Tom?
Yeah, sure. Let's take a look at the toys index, because this is a group that's having a pretty good day today. And the way you can tell is simply going into that sector summary. And then once you pull that up, you can go either into the consumer discretionary and get those individual industry groups, or you can go on the bottom here, and this will give you all the industry groups for all of these sectors. So if you click there, you'll see right at the top of the consumer discretionary or toys. Pulling a chart up here on the toys, you can see that there, as we moved lower here and put in these lows, check out the PPO, which is starting to turn back to the upside, and now we're getting a breakout above the 20. I think this is a group that has room for at least another 2 to 2.5% move to get back to that 50-day moving average and to the center line, and then we'll see what it's made of at that point. From a seasonality perspective, you can see that August actually is a pretty decent month for toys, but September is not. In fact, as you go into the end of the year, you'd think maybe they'd start building up maybe for Christmas, but that's really not the case. If you add these going across here, it's pretty much flat from September to December, and considering that the market tends to do really well at the end of the year, you can then pull this up from a seasonal perspective and compare toys to the S&P, and you can see the relative underperformance of toys in the last 4 months of the year. So we do have a positive divergence, which is good. That's giving us a short-term pop, but I'm not so sure we're going to continue that move given what I just looked at on the seasonality. We'll see.
All right. Well, let's go ahead and get started on our weekly sentiment report. Let me share with you some of the sentiment charts that I am looking at right now. And we're going to start off with the 10-day moving average of the put-call ratio. And this one, again, sentiment is contrarian. So when you see rising readings on the put-call ratio, that means that our investors are bearish. And if we see, and of course that means that's bullish for the market. So think, again, sentiment is contrarian. If everybody is bearish, then that's when you should expect that upside reversal. And of course, the reverse is true. When you get investors very bullish, you start looking for a bearish reversal or a downside reversal. So what are the sentiment charts currently telling us right now? Well, when we get these lows, that's, of course, when investors are very bullish, and that is bearish for the market. So we ended up getting lows here at the end of July. It didn't really pan out the way we might have expected as far as the sentiment goes. You would expect to see a decline after you get these lows. My guess is that, it wasn't that low. But at this point, we are rising out of that low. We did get the follow-on decline there earlier in August, but now we seem to be moving toward the upside. And with these readings rising, I would look at this chart as neutral because we've come off that low. We're rising slightly. We're not overbought yet. So we're not really getting the kind of information we really want from this chart right now. But the fact that it is starting to rise, that means investors are starting to get a little bit more bearish. And so that could be considered a little bit bullish for the market. But at this point, I would read this chart as mostly neutral as far as sentiment goes. All right, let's look at the American Association of Individual Investors sentiment. These numbers are taken from a poll that is on their website. I believe anybody can go there and click it and take it. Basically, it asks you, are you bullish, bearish, or neutral about the market? So this is one of those finger in the wind polls. So I'll explain that a little bit more later. But this is just, okay, how do you feel about the market? Well, what we can see right now is that investors are starting to feel more and more bullish. You have the sentiment as far as the percent of bears is decreasing. So we're seeing less and less bears. And as far as, if you start looking at the bullish sentiment, it is rising. Not really to the degree I would expect when you see these declines right here on the bearish readings. So that does tell us that we're some of those folks that are moving out of that bear camp are really just moving more into the neutral camp rather than going right into a complete switch to a bullish sentiment. But look at our bull-bear ratio here. It is starting to rise. I look for the reading of 2 to be overbought, so we're not quite there. But we do have, a fairly good amount of bulls here that are pulling this ratio higher, and it has continued higher. So again, this is showing us an increase in bullish sentiment, and bullish sentiment rising is bearish for the market. So previous chart, neutral. This chart, I'd say, is leaning bearish for the market. Let us go next to the National Association of Active Investment Managers and see what their exposure currently is to the market. Typically, when you get very high exposure, that means that they are very bullish. And of course, like I was just saying, when people are very bullish, you look for the reverse to happen. But a lot of times, these are the big guys who handle a lot of money, and they do use technical analysis when they do their studies. And so a lot of times they're not too far off. So you can see back here we had that highest reading ever since we started tracking this, and it did not lead to a big decline. It ended up pushing, we saw even higher prices after that. So I caveat this chart always with, you're looking for that extreme bullishness or extreme bearishness, but a lot of times these guys are are correct or on the money in the following week or two. So their exposure is mostly flat right now, but you know, when you look into the thumbnail, it is decreasing slightly, but I'd say it's fairly flat, which of course tells me a neutral position. They're not pulling back really, but they're not piling on at, you know, really. So they're on the higher side at the 90 range, but I'm seeing it flat. At this point, I would look at this as neutral for the market. And I hate neutral because it doesn't it doesn't really give us a one way or the other, but you got to call them as you see them. All right, so let's look at the RIDEX analysis chart. Okay, and these we call it the RIDEX ratio. Guggenheim actually is now managing this group of funds that used to be managed by a company called RIDEX. And what we did, and they're still in existence, those funds, is what we did is we took the basket of the bear funds and tracked the assets, because they report the assets every night in what's in those funds. And so we track that. And so there's a basket of bear funds. There's the assets that are going in and out of money market funds. And then there's the assets that are going into the bull and sector funds. So the way we look at this, and as I said, remember that AAII chart was a finger in the wind. That was, I feel bullish, oh, I feel bearish. It's really easy to kind of go back and forth. So a lot of times those polls aren't, you know, particularly useful. This chart, I think, is very useful because this is money where the mouth is. So if they're saying they're bullish, but we're seeing an increase in the bear funds as far as assets, that tells me that although they're saying, well, you know, I'm feeling pretty bullish, no, they're actually bearish. The money is going into the bear funds. So that's why I think it's very important to look at this chart for our sentiment readings. I think it gives us a much better picture than a lot of those finger in the wind type polls. But I think those are, of course, interesting, and it's just more data that we can crunch and, you know, discuss. So I'm looking at the RIDEX ratio, and this is the assets in the bull and money market funds, the bear and the money market funds, over the bull asset funds. So you're getting the bearish on top and you're getting the bullish on the bottom. So the smaller this number gets, the more bullish everybody is, because the denominator is the one that's increasing, and as of course your denominator, as it moves more and more towards infinity, of course we don't have infinity here, you get closer and closer, you get a smaller and smaller number, closer and closer to a zero reading. All right, so what is the ratio telling us? Well, we've been in this, you know, this sideways move as far as that ratio goes. But I've been watching, as of late, the rising bottoms on the ratio. And I am waiting to see that go below that rising bottoms trend line. And what it would tell me is if we get that breakdown, that means that we're starting to see more and more assets going into the bear and money market funds. And so I would be watching that to see if we get that breakdown. We want to see the number get very high on this ratio, because that typically is where you're going to see some reversals to the upside. Again, if your activity, if you're showing more assets going towards bear and money market funds, you know, that is telling you that there's an upside reversal on the way. And you can see that it's pretty accurate. I mean, we got one here, a low, we got lows back here before this run. Of course, we got a very low reading. Lots of money was going into those bear and money market funds. You know, after a decline like this, of course, that's what you would expect. But it got very, very bearish. And that's when we started to see the ratio rise along with price rising. So what we're seeing right now is bearish activity. We see more assets going into the bear funds, and we're seeing the money market trending up as well. as far as money and assets go. But look at our bull funds. They're very stagnant. We're not seeing money leave. So I wouldn't say that everybody's particularly bearish, but we're not seeing money go in. And we're seeing the assets rising here in those bear and money market funds. So to me, I would look at this as investors are starting to get very bearish. They're not overly bearish because I'm not seeing the assets being lost here in the bull and sector funds. So I think we could certainly be due for more bearish sentiment. And as we start to rise, I suspect that might rise as well, because people might start to get nervous about overbought activity, that sort of thing. So at this point, I would read the right-X ratio chart as a, showing bearish sentiment, and that is bullish for the market. All right, so let's go ahead and look at our summary. Actually, before we look at the summary, skip that. Sorry, Gretchen. All right, let's go ahead and let's look at the ultra short-term indicators. So I look at this as a sentiment chart because I do include the VIX on it, and the VIX is really a very good gauge of sentiment and where it's going. And since I'm looking at this in a sentiment regard, I want to flip the VIX readings, because to me, as far as sentiment is concerned, if people get very, very bullish, that is leads to a likelihood of a downside reversal. You're overbought as far as the VIX is concerned in a sentiment review analysis. And similarly, when people get very bearish and that VIX starts to rise and we see those punctures of the lower Bollinger Band, that's when you should start expecting to see some activity on a reversal to the upside. And you can see that it really has held fairly true even in the last two when we were looking at these punctures. And they were combined, this one in particular, people were feeling much more bearish. We were seeing, as far as breadth was concerned, we were seeing some very high readings. All of that supported an upside reversal. But look what we're looking at right now. Currently, the VIX isn't telling me much. It is sitting kind of in the middle of those Bollinger Bands. So, as far as the sentiment of the VIX is concerned, we're looking at mostly neutral. But what's going on as far as the breadth is concerned? And this is, of course, the net advanced declines as of yesterday. We'll have to see what ends up happening today. But based on this chart yesterday, you're seeing breadth in decline, and it's gotten to a very large decline. But currently, and you can see right now, because this is a current reading, the new highs are starting to move up just a little bit. When you see a decline in breadth to this degree, and it is not really lining up well with, and it's in a negative divergence with a price rise, that is telling me to expect some selling going on. And we've got a little bit of selling the last 2 days. And I think that was a sign that we are reaching somewhat of a selling exhaustion in the very short term. And we are starting to see a little bit of improvement here on the new highs. So over the next few days, going into next week, I would feel bullish at this point. But overall, when I think about next week, and I'm going to be doing my poll as to whether I'm bullish or bearish, and we'll take a look at your poll shortly, I'm going to be going into next week as neutral because I can see there are too many things going on as far as sentiment. It's mixed. And let's go ahead and bring that summary slide up, and I'll show you what I mean. So if you look at just looking at the right side of these so that you can see what it is for the market, I will have this, of course, this summary slide up in the Market Watchers Live recap. But you can see a neutral, you can see a bearish for AAII, neutral for NAME. You've got the right-X ratio neutral to bullish, and you have breadth is lining up for a selling exhaustion, like I said, and it looks like that has occurred just off of the move that we're seeing today. I would expect possibly that to continue maybe into the beginning of next week. But overall sentiment is mixed, and to me it's leaning toward, more of a selling exhaustion. As far as the last 3 days, that's why I'm looking for a little bit of an upturn early in the week. But overall, I would say we're neutral. I just don't see the market really getting ready to take a big move upward, but I don't see it really lining up for a major pullback next week either. So why don't we go ahead and bring up that poll? I'm interested in what you're thinking right now, Tom. But as I said, I think going into next week, I would be mostly interested in being in the neutral camp. And again, I always hate neutral because I feel like it's like you're just not stating an opinion. But when the technicals are what they are, I'm not going to go out on a limb in either direction if it's just not proving out in one direction or the other.
Yeah, wow, this is a tough one because I really like to see where we close today before making a call.
Yes, and actually for the sentiment survey, we do get to wait until the end of the day. So you can give me your opinion, and if you change it, I will change it when I tell Mark what our sentiment is.
Well, if the S&P closes above 2873 today, I would be bullish next week. If it doesn't and we fail after breaking out again intraday, then I would be bearish next week. It's that simple.
Okay. So you're not going to take a neutral stance. You're just you go all out there one way or the other.
Yeah, I think we're either getting a breakout or we're getting a false breakout. So I would go in one direction or the other. I don't think that the market is just going to sit right here. I mean, it could fail and just kind of be in a flag formation. It could actually sit underneath. But I think if we get a breakout, I don't think the market will sit. I think we'll see higher prices.
All right. Excellent. Well, great show with Greg here today. And it looks like as far as our poll goes, everybody's in the higher camp for next week. So I think that does prove out that we're seeing a lot of bullish, the sentiment is starting to build to the bullish side.
Yeah, right now, I mean, we do have the Dow Jones Industrial Average up near 25.8. I think the number I'd said earlier was 26.6, up in that neighborhood where we've got an all-time high. So the Dow still has some more room to the upside here.
Oh, definitely, definitely. All right, well, there's our upcoming schedule for next week. Looking forward to your seasonality report. You kind of teased us with it a little bit about what's getting ready to happen in September. And my dad, Carl, will be here Wednesday. Looking forward to talking to him. And then Labor Day, and my guest host, Julius, will be in while you're doing the wedding thing.
Yes, you're going to get Julius for a couple of days. I will be heading to Charlottesville, Virginia, getting ready for my daughter's wedding. Very excited about that. And so, I got I'll still be in first few days next week, and I will do that seasonality report. And I mentioned earlier, or maybe I think I mentioned it in my blog earlier, that Nike is a stock that tends to do really well in September, even though the overall market doesn't. And there are other stocks that do the same. So a little teaser for next week. You'll want to tune in for that, no doubt.
Absolutely.
All right. Well, you have to wish your dad a happy birthday from me. And from all of us at StockCharts. Of course, Carl's done so much for StockCharts over the years, so we want to wish him a happy birthday.
Mm-hmm.
All right. Well, let's go ahead and wrap it up. Do want to thank everybody for being with us today. Please remember to complete the survey as you exit. Love to get your feedback, hear what you think of Market Watchers Live. Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy your weekend, and we will see you back here on Monday. Be safe. Happy trading.